Howdy everybody and welcome back to another Sunday video. Today I would actually like to go over my three top holdings on my portfolio. As you can see right here, Chevron Corporation making up $12,382, Verzion making up $14,376, and Abbvie a little bit more than $7,000. And aside from just showing you guys how much I have, how much it has gone up, I would actually like to use a website that I've shown here before where we're going to analyze these three companies from 2013. There's a reason for that number, and see if you would have put in an entire portfolio into one of those companies, how much would you have today based on three different time periods. So with that said, let's get started. So we are over here at the backtest portfolio asset allocations. Guys, I actually showed this before in one of my previous videos. However, you know what? I'm actually going to leave this exact website in the link in the description just so that way you guys could do it for your own sake. So I'm going to be taking those three companies and I'm going to test them out to see if you were to put in an entire portfolio just onto those companies, how much money you would have today, looking at it from three different perspectives. So the first perspective is going to actually be, so the first one, I'm going to look at it from the year 2013 to 2022. Now, the reason why I'm actually choosing 2013 is because I originally wanted to put it at 1996, the year I was born. However, Abbvie is a company that doesn't have any data prior to 2013 because that's essentially when they got spun off. So let's just put it at 2013 just so that way we can see Abbvie and its total movement. And of course, we're going to end it here in 2022. Now we're going to put an initial amount of $1,000, and let's say that we're going to put in a fixed amount for $2,000 every single month. Now you guys are probably saying $2,000 a month, that's crazy. Well, when I actually first started investing in this dividend portfolio, I was actually doing $2,000 a month. As somebody who works in engineering, you know, I kind of can't afford this. Obviously, if you guys can't, then by all means, you could put in your own number that you so wish to do so. But nonetheless, I was doing $2,000 a month. So I'm going to be projecting this as well just to see what this graphs would look like. We're going to adjust for inflation. Let's not do any rebalance. Let's not put any leverage types. And of course, we're going to reinvest the dividends because we want this portfolio to grow exponentially. And we're going to put in the three tickers of VZ for Verzion, Chevron, and Abbvie. Now, doing all this, we're going to put the asset allocation at 100% for all three. Let's pretend that there are three portfolios. Each company is one portfolio, each one of them at 100%. And then once we do this, we can actually come down here and we can see the total portfolio returns. So you can see right here, as of 2013, Abbvie was the one that generated the most amount, having a total balance today, guys, of a whopping $647,000, assuming that you would put in $2,000 every single month. Chevron at the second highest at almost $500,000, and Verzion at $304,000, which is just absolutely insane. The one having the worst year was actually Chevron, down almost 26%, Verzion down 7.53%, and Abbvie was actually the best one that held up at 6.46%. Now, as you can see by this graph, guys, this is looking fairly good. They all pretty much just started roughly around the same, and then at around 2014, it's when Abbvie started to split off, and Verzion and Chevron kind of started downtrending. They got together again in 2016 or so. And then Abbvie really just came out of nowhere when it came to this. Just look at this. Then they came back together again on around June 30th, 2019. And then that's when Chevron actually started to go down as of March 31st. 2020. Now, if you guys all remember, this is when oil actually started to go negative, right? It went to believe negative $30 a barrel or so. But then we all know what happened after that. Well, if you guys have been to a gas pump recently, then you probably know what's been happening. And as you can see right here, as of October 31st, 2021, Chevron just completely exploded and is actually catching up to Abbvie right now. However, Verizon's been pretty much steady. Now, this actually shows a lot of information, guys, mainly because of the fact that, well, the most volatile one here, in my personal opinion, would actually be Chevron. It is the one that has been most up and down. However, The one that's most consistent is actually Verizon. Verizon is actually one of those stocks that doesn't move. During that pandemic, I think it went as low as like what, $45 or $44, and even recently it also went down to around $44 too. But nonetheless, this is how much you would have if you would have put in $2,000 every single month and you would have started investing in January, or at least in December 31st, 2012. Now let's take a look at this exact same thing. However, let's put a benchmark ticker. Let's compare this to the actual VOO, which is the ETF, the Vanguard ETFs to be specific, for the S&P 500, keeping everything else the same. If we actually come down here, we could see that actually Abbvie was the only one that even surpassed the S&P 500 most of the time, right? Verizon and Chevron were actually lower. Chevron up until around, again, October 31st is when it actually came above Verizon, and then as of recently is when it went above VOO. However, Chevron overall was pretty much underperforming the S&P 500 overall. Now, however, let's take a look at the third aspect of this, and this is showing you guys how much these assets would be up, assuming that you would have invested the same time that I started investing. Now, as I said, I started investing January 2020, and we don't know what happened in March of 2020, right? Everything else just collapsed. So if you were to do the exact same thing during that big collapse, what would you actually have in total assets right now in just 2 years of investing consistently $2,000 into this portfolio of having Verizon, Chevron, and Abbvie? Well, as you guys can see right here, the best performing asset was none other than Chevron, and it's probably because of the fact that oil just completely skyrocketed within these past couple months, right? With a whopping $114,000. Abbvie at $90,309, and Verizon at the lowest at $60,000. And the one that actually had the worst performance again was actually Chevron at 25.97%. Then it was Verizon at 7.53%. However, Abbvie, the worst year Abbvie had in these past 2 years was a positive almost 11%. So you could just see the tear that Abbvie has just been having this past 2 years. It's absolutely insane. And it's honestly fairly understandable because after the March 2020 crash, Abbvie was just an absolute tear, going from a low of around $65 or so all the way to the current share price of $147. In fact, this isn't even the peak. The peak of it was at around almost $180. So it actually does make sense that Abbvie was the best performing, even having the worst year at only 10.97% in the positive, not even in the red. But as you can see right here, overall, Chevron was actually underperforming most of them for the majority of the time, especially right here at the end of around 2020. And then after that, well, Chevron right now is the winner at the current final balance of around $114,000. So that just goes to show that it's actually not timing the market. However, it is time in the market, and of course, knowing what kind of price you want to buy for a company. Now let's actually do this one more time. However, let's put in the benchmark as well when it comes to this 2020 start year, and let's also do VOO and see how much we've actually outperformed the market just with these three holdings. And as you can see right here, only one of them has underperformed, and that is none other than Verizon. Abbvie and Chevron, as of as of December 31st, 2021, they just completely eclipsed the S&P 500, which is very, very interesting. As well as over here at around February 28th, 2021, they were essentially matching the S&P 500. So guys, as it stands, this is essentially why I'm constantly harping at you do not want to buy companies that are over evaluated, because if you buy a company that's over evaluated, you would have never been able to get this kind of return in just 2 years. I mean, just look at Chevron, $114,000, which is just absolutely insane. Now, you guys are probably wondering, well, if you were investing in Chevron for the majority of 2020, and you were putting in $2,000 every single month, why are you only up $9,340? Well, the reason why this is still this low is because when oil was going negative, I got scared and I did not invest anymore. And the reason for that is because Well, I didn't have this graph, guys. This is my monthly dividends graph that I have on my spreadsheet. And as you can see right here, I have around 3 years of data when it comes to this. When Chevron fell to around $40 or so and oil fell to negative $30 a barrel, I only had up until March of 2020, meaning I only had up to the $14 right here that I got for March. So I didn't have this kind of data, and as you can see the exponential growth that I've had so far just investing in dividends. Because I didn't have the data, I was afraid that, well, my investment was going to go to zero. Looking back at it now, hindsight's 2020, and well, I would actually be significantly more up. Now, when it comes to Chevron, well, my average price is around $101. So it isn't as good as it could be, but it's still not as bad as it could have been. So just because I didn't buy at $40 or so, that doesn't mean that I still didn't realize my mistake when Chevron actually went all the way up to around 110, then it fell back down to around $90 or so. And that's when I actually started buying a lot, and that's actually the reason why I'm up $9,000 or so. Now, when it comes to Abbvie, Abbvie is a company that I honestly wasn't expecting it to reach the price that it is today. And I was buying at around the $100 mark. Unfortunately, I did not buy it around the $80 or so for mainly the same reasons as Chevron. So that's essentially why I am only $2,741 up. And when it comes to Verzion, well, as you can see, I am down 4 1/3%, $622 or so. But this is mainly because of the fact that I actually started investing a lot into Verzion after it rebounded. Recently, ever since it fell to around $40 or so, I started buying a lot more. So hopefully, as time passes, Verzion will continue to go up and this will eventually turn into the green. But aside from that, I am still earning a really nice big dividend when it comes to Verzion. All in all, guys, this was just my way of showing you that timing the market is not necessarily a good thing. Now, a lot of you guys might say, well, what you're doing with your stock analysis is timing the market. Not necessarily. I'm not telling you guys to essentially buy and sell at this price. I'm only telling you, hey, this is my intrinsic value for the company. This is what you should be buying, assuming that you believe my assumptions, right? If you don't, then that's fine. Make your own assumptions. That's why I have these calculators available for everybody. My point is that you do not want to overpay for something, because the more you pay for something today, the less returns you're going to have in the future. So you want to come in at a right entry point that is right based off of the assumptions that you make in for the cash flow in the future. That's essentially it. Once you buy it, you do not sell. You just keep buying more and more and more. And then eventually you will have over $500,000, as you just saw when it comes to Abbvie. That pretty much does it for this video. Like if you like, comment, subscribe. It really does help here with the algorithm on YouTube. You guys can follow me on my new tech sites. Links are in the description below. Also have a Let's Play channel playing Stardew Valley with my girlfriend. So if you guys want to see that, you guys can follow me there. With that said, peace out and be on the lookout for the next video.